Alright, we'll do one thing, we can come back. Okay, we have Siddharth Purohit, an analyst of Bank of India, who joins us. Siddharth, what are the initial numbers telling you about 37% rise in gross NPLs to nearly 50,000 crores? Do you think the worst is out, or you will have to prepare for more?
See, Bank of India has always, seen stress for last 2-3 quarters has been even worse than what initially was thought to be. And this quarter has again been, quite high in terms of absolute increase in gross NPA. If you just see, the provisioning number for almost all the PSU banks were high for this quarter, and same trend is for Bank of India also. But then also on a quarter-on-quarter basis, from 3,600 crore almost provision to 5,400 crores or looks on a higher side. But I think that has been a kind of trend for the entire PSU to shore up their provisioning coverage ratio, which was on a lower side. So it's not very surprising to report a loss for this quarter. But what matters is that whether after this slippages and substantial rise in NPA, now from last quarter 9.18% gross NPA, now we are almost 13% plus. So whether this is the end or not, that I think the management should give a guidance in terms of SMA2 numbers and outstanding.
Actually, the important point is the NPLs has risen also because the balance sheet has shrunk. Advances have fallen from 4 lakh crore to 3.5 lakh crore. That's a huge fall in advances. It's a fall of almost 40,000 crore in advances. So it is because the numerator has gone down that the amount of bad loans also seems like a higher percentage. I'm not saying 37% higher is a small number, but my sense is that since the balance sheet has been crunched in this fashion, that 13% looks very bad, but my sense is that a large part of the cleaning looks like done. Okay, during the quarter, the bank had changed its accounting policy of provisioning in respect of NPAs as doubtful from 60% accelerated provision to 40% minimum provisioning. Okay, had the earlier policy been formed, the provision would have been higher by 2,800 crore. So they used to provide more. Now they have reduced it to 40%, but they have not still given the overall PCR number.
That number is there, Lata. PCR stands at 51.14 at the end of this quarter versus 52.4. So there is a deterioration, I guess, in the PCR.
Right, but that's a little mild, not huge. It's very obvious that another 20% will have to be provided for. So provisioning problem, even if the bank doesn't generate NPLs in this accelerated fashion, in this seminal fashion, the very fact that they have to provide for the balance 20%,
nowhere close to the mandated 70%.
Yeah, mandated, I think this is advised. And this is an advice which came from Mr. Mundra yesterday. So it's something that the Reserve Bank is now by moral suasion trying to push the bank. It's not as if a rule existed, but the Deputy Governor of the Reserve Bank in charge of banking supervision mentioned that number in the public domain yesterday, that they would urge banks to not stop the cleanup now, but to continue with it and proceed towards a 70% provisioning. And therefore we should expect that for the next few quarters as well, provisioning will be high, but one hopes generation of fresh slippages will not be as high as this. Bajrang Bafna, the head of research, head of equity and strategy at Sunidhi, is also joined in. Bajrang, what's your first thought? Is the bad news out? Is Bank of India looking like it is buyable at 80 rupees?
As Lata pointed out by you also, and we are expecting for most of the public sector banks, the accelerated slippages are clearly visible as, indicated by us through our Z score analysis. And I think mostly this 20% kind of range of, stressed assets which are sitting on the balance sheets of banks. And I hope with this GNPA and the restructuring number, that number is already, now visible to us, considering also the SDR and 525, though we don't have those numbers, but the trend is very similar across most PSU banks. So I think major part of the cleaning is over, and that's definitely a good news, but it requires to be provided in the P&L also, which will take at least 2 years time to get into the P&L and eventually depressed ROEs. So that is what the bigger concern. So the stock price shouldn't react very much positively on that. Of course, we have seen in PNB case also the stock price has not fallen despite bad numbers, and the similar should be the trend for other banks, because they are already factoring this kind of slippages.
Fair point. I just wanted to add that the bank has said that about 165 crores has been provisioning because of the loans to the Punjab government for food credit, and another 140 odd crores is because of provisioning for Discom loans to, I think, Haryana. So as you can see, it's partly government policy also that is forcing them to provide for more. 109 crore were in respect of loans converted into state government loans, and another 24 crores of loans which were converted into Discom bonds for the Haryana state government. These are of course part of the Uday scheme, and then of course separately another 165 crore because of loans given to the Punjab government. See, when your bad loan is 49,000 crores, a small 500 crores has been because of errant government actions or government policy actions, not errant, but that's the story. Okay, we are getting now some good numbers. Okay, Bajrang, thank you very much for joining us. We now have to move over to Heidelberg, and those are looking like good numbers. EBITDA margins, as in all cement companies, have come in at 200 basis point higher. Net profit is superbly higher, 3 times the number posted year ago. We will have to look at the EBITDA number really. Income would be lower because all cement companies cut their prices. So this is flat at an income level, but my sense is EBITDA is higher, yes, at about 9%, not a whole lot higher. So clearly realizations may have been lower, but margins are very good, and I think the market will take heart from this 250 basis point jump in, 150 basis point jump in margins.
Okay, so flurry of earnings continuing. Bank of India not very good. Heidelberg definitely better off. Let's take a quick break on that note. We'll get you more market updates on the other side.